Welcome back, smart investors. Today's video will be the first in a series of how to get started in trading the stock market and ultimately creating a portfolio that will grow with you over time. As I'm not a licensed financial advisor, I won't be able to give you direct information related to your situation. However, I can provide you general information in an entertainment format. So take that with a grain of salt, and I hope this helps you to get started in trading on the stock market. So the first thing I would suggest you do is create a plan. First thing you want to determine is your initial investment. This isn't exactly the amount of money you want to put onto the stock market. It's just the amount of money you want to put in your stock trading account. So when you're ready to start trading or you found an opportunity that you like, then you can place the trade. Once you've decided this, have a look at whether you want to target growth stocks or income stocks. Growth stocks are companies that obviously grow over time and their value increases, and so does their stock price. Income-bearing stocks trade a lot more consistently and aren't quite as volatile, so they might trend sideways a lot more. And they will provide back a dividend to their customers. Australian companies will do this bi-yearly, and US companies will do this quarterly. Once you've decided on this, then you can have a look at how frequent you want to trade and how much money you want to commit to trading on a regular basis. So you might want to trade with $1,000 every month and invest into companies every month. Or if that might be too frequent, you might want to do $3,000 every 3 months. Just working out that frequency and creating a bit of a plan will help you stay consistent in growing your portfolio and ultimately your net wealth. Setting a goal for your stock portfolio is an excellent way to predict how much money you're expecting to have at the end of any given year. I keep a conservative valuation of 15% a year, and that allows me to see if my stocks aren't performing, then I can reevaluate where they should be. Once you've completed your basic plan, you'll then be able to start looking for a broker. A broker will allow you to place trades into the stock market. There's generally always fees associated with an account, even if they say $0 commission trades. So make sure you're aware of all the fees that are associated with your account before you get started trading with them. You'll also want to make sure that you're aware of all the features and additional bonuses that they offer as well. This could be anything from charting software to indicators and oscillators that are unique to them. It could also mean, just being able to put a stop loss on some of your trades. For American or Chinese traders, I would recommend Webull. You can check out my video review on the platform up here. For Australian traders looking to trade the US stock market, I would recommend Stake. I also did a video review on them recently. You can check it out up here. And for Australians looking to trade the Australian stock market, I would recommend SelfWealth. When opening an account, you'll generally get the offer to sign up to 3 different types of accounts. And these are pretty straightforward, but it's something that you should consider because depending on what you choose from will have different tax implications. The first one is individual. Second, we've got self-managed super fund, and third is a company. This might be a little bit different internationally, but this is the general options you'll get. Let's go through the tax implications for each type and help you determine which account type will be best suited for you. As an individual account holder, you'll need to understand that you'll be paying tax when a capital gains tax event occurs. This is when you make a capital gain or a capital loss. Capital gains can be offset with capital losses to give you a net profit, and this is what is subject to capital gains tax. If you hold the asset for longer than 12 months, you'll get a 50% discount on your capital gains tax. Your personal tax rate will take into play how much you'll actually pay. This is best suited for non-active traders that are buying and holding, but doesn't mean you can't not hold the asset for longer than 12 months. You're just going to subject to pay more tax for it. With the self-managed super fund account, you are paying 0% tax if you're in the pension phase. If you're in your accumulation phase, you'll pay 15% tax if you held it less than 12 months. Hold the asset longer than 12 months and you'll only pay 10% tax. That's a 33% discount. This is best suited for any type of trader, but you'll need your super in a self-managed super fund. Choosing the company account, you'll be subject to a flat 30% tax rate. You'll have related deductions such as computers. You'll also have sales of shares and dividends will go towards your assessable income. You will need a trading plan. Now, what we discussed before as a plan is just a very, very basic plan. If you're providing the ATO with a trading plan, you will need to include a lot more detailed information, such as what are you going to do if you lose money, what your trading style will be, how you're looking to make money, how often you plan to trade. So there's a lot more information you'll need to include in that trading plan when you're setting up this company structure. You'll also have company costs that you'll need to consider. Setup company costs can also be deducted. This is best suited for short-term, high frequency, or high tax paying traders. After you've signed up to your broker, I would suggest you install their app, as well as Webull and FinViz, so that you can monitor your stocks clearly and easily. Then you're going to want to fund your account. Look for the cheapest way that you can fund your account through the available options with your broker. This could be anywhere from bank transfer to using Poly, or even using credit card to fund your account. If you're trading US market and you're in Australia, you're also going to have to transfer your currency, your Australian currency, into US currency as well. This concludes the basics on how to get started in the stock markets. Next video, we're going to get a bit more advanced, and I'm going to be covering how to place a trade, exchange traded funds, and how you can monitor your portfolio. If you've enjoyed the video and you're not already subscribed, please hit that subscribe button. And if you know someone that might enjoy this video or take advantage of it, please send it along to them as well, or share on social media. Thanks everyone. Look forward to seeing you in the next video. Leave a comment if you have any suggestions or ideas that you want to see in the next video as well. Thank you.